All right, guys, it's Saturday morning, so I'm going to do my weekly Big Four growth stocks that I'll be adding aggressively all year. So today was this week was a wild day in the market, especially rolling into Wednesday, Thursday, and part of Friday. So what I'm going to do is I'm going to make a video of my thoughts, overview, where I think the market's going to go in the coming, weeks and months. So I'll make that tomorrow. So make sure you subscribe, like, comment below. I will make that video tomorrow for anyone interested to hear my thoughts. So also, just subscribe. I will really want to get this channel to 500 subscribers by the end of this month, which will be March. So I really think we can do it, and just hitting that subscribe button really, I really appreciate it so much. So thank all you guys that have been doing it, and let's keep it going. So like I said, March, we got week one, my big four. So these are my big four growth stocks I've been preaching all year since the start of the beginning of January 2021. I really believe in these companies. If this is your first time watching this video or my channel, I am a long-term investor, and I really like growth stocks. And as most of you guys know, or if you play the market or have experience in it, growth stocks in general are very overvalued right now in general. So you got to really be careful in when you buy, what you buy. But I feel like the risk reward is exciting with growth stocks. So, and you can predict them. It's not like penny stocks, day trading, or swing trading or anything like that. Like I feel like that's very risky stuff. So before I get into the big four stocks that I'm focusing on this year, the NASDAQ this week went from 13,400 to 12,920 this week. So that's a 2.06% drop, which that's a pretty big drop, to be honest. So usually when the NASDAQ drops, 1 or 2%, all these stocks will get hit. Multiply it by 2 or 3, usually, as I like saying, depending on how overvalued these stocks are. PayPal, Dropbox, Tattoo Chef, and Beyond Meat are all in the NASDAQ. So that's why I put the NASDAQ numbers here, because it directly correlates to these four stocks. So that's a nice drop. I made a video about a week and a half ago of my thoughts on the market. If you watched my previous videos, I haven't bought any stocks the first 6 to 7 weeks of this year because everything was overvalued. The past week, I've deployed or bought stocks, especially last Friday, Wednesday, Thursday, and I actually bought some yesterday. I bought more Tattoo Chef, and I bought Corsair, which is another stock I started this year. I keep deploying, averaging down my cost base. If you haven't watched my previous channels, I've made individual videos on why I'm so bullish on these four. So if you want to check them out, just go back in a couple of my videos and you'll find them. I mean, the titles are very clear. So without further ado, this week, week 1 of March, PayPal, tickers PYPL. It opened Monday at 268.90. It fell to 239.05 by the close of Friday. So that is a massive decline. It fell 11.10% this week. So that's a really big drop. Massive correction. Once all the news came of them accepting crypto, the going over to China and not being governed by them or being controlled by them, that was big news. So a lot of big news happened in the past month and a half on the stock, which is why it ran so much. My cost base is below $200. So right now I'm not really focusing on adding to this because I'm still up in this position. If you haven't started a position in PayPal, buying at 239.05 with the current news is about the highest point I would buy, if that makes sense. So I would buy it now if you don't own it, and if it keeps going down, average cost down. But with an 11% dip, the valuation at 239 as far as market cap, I like this stock. So this is a great stock. If you're not in it, I would recommend buying it. If it goes down, average cost down. So I mean, I'm happy it went down because it just gives you buying opportunity. So did I buy this week? No. Why? Because my cost base is below 200. Not interested. I believe it's 185 or 190 off the top of my head. So don't really have any interest in averaging cost up in this market. Dropbox is another stock that I'm really focusing on this year. This stock actually had a 2.75% gain this week, so that's very interesting. They had some really good earnings come out. I feel like the stock's really beat down, undervalued. Wall Street's really overlooking it. Dropbox is going to be a major player in their space in the next 3 to 10 years, in my opinion. So it's beat down. It's a great buy. It went from $22.85 to $23.48. So this is a really, really, really strong buy. I love this stock under $25. So if you don't own this stock, I feel like right now is a great time to get in it. My cost base is, I believe it's $18 or $19. So this is, again, just kind of like PayPal. I'm not looking to average cost up with this kind of market based on my other cost bases. Is it a bad time to buy Dropbox? No. Like I just said, 25 and under, I love. So if you don't own this stock, now is a great time to get in it because I think it's really going to have some good success in the next couple of years. Tattoo Chef, ticker is TTCF. It opened Monday at $20.87 and it closed Friday at $19.12. It had a massive decline, just like PayPal, 8.38%. This stock was actually bouncing around in the high 17s, $18 range early Friday and I think late Thursday. So this stock is, this is like, you're getting a steal on this company for what their plans are this year, next year, the next 5-10 years. Like if they execute, they're going to be a monster. So you're getting a steal at $19.12. My cost base on this stock, I've been buying it actively. If you've watched my previous videos, I think I've bought it 4 or 5 times in the past week. Roughly anywhere from 5 to 10% of my position every time. So this position is turning into like a top 3 position of mine. It is a really, really big position now because I love this price. It just keeps going down, down, and down, down. I'm going to add more and more and more and more. So that's kind of how I look at it. My cost base now is $22 even. I bought some Friday. I didn't make a video on that yet, but I did buy some Friday and I believe my cost base will probably be mid 21 now. So it's a great buy. Highly recommend buying this stock. Let me see where I'm at here with the video. I apologize. If it wants to read, okay. Okay, cool. So last one is Beyond Meat. Ticker is BYND. It opened Monday at $150 even. It closed at $138.30. So this one had a 7.79% decrease this week also. So like I said in the beginning of the video, NASDAQ dropped 2%. That's a big deal. Multiply it by usually 2 to 4, I guess. And that's why, you see these heavy growth stocks get hit really big. So when you see the NASDAQ drop 2% or 4%, like if you really believe in these companies, you should be buying and not panic selling. Like just don't panic sell. If you're selling your stocks that you really believe in, you need to relook at the companies that, like you just don't do that. So yeah, 7.74%. My cost base on this one is, I believe it's around the 120, 115 range. So again, I'm up on this position overall, so it's not really one was actively buying. There was a lot of good news with Beyond Meat in the past month or so. They signed with Pepsi. They're just doing big things. They're making a snack. They didn't really disclose what it is, but there's a lot of good news. Earnings was great in it. I mean, all 4 of these stocks are going to kill it, and they all had great earnings, great everything, like good news on all of these stocks. Like you could look at all the earnings, you can look at all the deals they just signed, you can look at all the future places where they're going to go. It's just awesome. So love these 4. I'm going to rate where I would buy the heaviest. If I didn't own any of these stocks, where I would go, 1 being the strongest buy, 4 being the least buy. So Tattoo Chef would be a strong 1 at $19. I love that stock. Number 2, based on the evaluations right now, I would do Dropbox. Dropbox, again, under 25 is great. Love it. So that's closer to 25, obviously. This is just a steal, but I'd buy this one first, buy this one second right now. This is a tough one. I'd probably do PayPal 3, just because I like their vision long term. The stock got crushed this week, so you got to factor that in. And then 4 would be Beyond Meat. But they're all good buys right now. Like this is a good buy, this is a good buy. this is a steal. This is a steal in my opinion. So overall portfolio this week, this is the second week it is red again. So I lost 4.28% of my total portfolio this week, which actually wasn't that bad. I thought it was gonna be way worse. I think Thursday and Wednesday I was down. I had to have been down over 10% because it did rally back late Friday evening. So 4.28%, took advantage of it, bought a lot of stocks, made videos about it. What am I doing? I'm holding my positions. I'm taking advantage of deals. Again, I'll make videos whenever I buy. Video tomorrow, which is kind of cool. I'm gonna share in detail my thoughts on where the market's going, how to prepare, the mindset you need, just really, you know, an overview of how I'm gonna handle the next couple weeks, where I think it's going, and months. So that's it. Cash heavy right now. I got 28% cash. I've had 30, 35 in the past like week and a half, but I've been deploying cash in the market. So now I'm down to 28, just really nibbling at it. But yeah, that's all I got. Again, guys, if you can like, subscribe, comment below. I'm really trying to get to 500 subs by the end of the month. I think we can do it. So yeah, that's all I got. Peace.